Hey everyone, welcome to today's video. If you're someone that saw the gold and silver markets absolutely crash over the weekend and you were sitting there thinking, what the hell happened? What was the actual fundamental reason why these two precious metals sunk so aggressively? I'm going to break down for you in this video exactly why the US dollar was the catalyst that caused both the precious metals to sell off. And we've seen a sharp recovery today, again, in gold and silver. And I'm going to explain to you again because of the US dollar getting weaker after the initial surge that we saw. And by the end of this video, I'll then show you how to predict the value of the US dollar based on markets' expectations for interest rate changes by the Federal Reserve. And I'll show you how it's the Federal Reserve's interest rate, which is the catalyst that causes the dollar to strengthen or weaken in the markets. So you need to understand central banks. You need to understand interest rates. You need to understand how interest rates drive the value of a currency like the dollar and why the dollar drives the value of gold and silver, because the US dollar is the world's reserve currency. So commodities are priced in dollars. Okay, so let's go back and look at what happened. Okay, Friday sell-off is the biggest shock to the rally as we've been seeing. Gold has been absolutely surging. Okay, so has silver been absolutely surging as well. Both commodities are booming at this moment in time. Okay, now I did explain in another video on my YouTube channel about why this was happening, but it's called the debasement trade. Federal Reserve independence is at risk because of it's constantly under attack by Trump to lower interest rates. Markets don't like it. Central banks around the world are diversifying away from the US dollar because after the war on Ukraine, Europe confiscated, okay, Russia's assets after the invasion, okay, and they sanctioned Russian US treasuries and dollars. They froze $300 billion, and it says it here, okay. Sanctions on the Kremlin central bank prompted reserve managers everywhere around the world to rethink their reliance on assets held within Western financial systems. Okay, so many countries who don't want their wealth to be frozen from them by America or European banks. So basically everyone outside of Europe, all the other countries, South America, Asia, they're looking at it in Africa and thinking, I don't want to be holding my money in US dollars and I don't want to be owning US treasuries, because if you can confiscate the wealth of my country because I don't do what you want me to do or you don't agree with what I want to do, then you just take away the wealth that I've taken years to build up for the people of the country. And that doesn't really sit right with people, and that kind of puts into question, well, is the dollar really a reserve currency if it can be used as a political weapon just to steal the wealth of a country like Russia, which is essentially what the Europeans have done, which is crazy. Okay, so central banks around the world are buying up gold aggressively because they're trying to sell US treasuries, get away from owning dollars, buy more gold so they can't be sanctioned. Basically, that is what's really happening. And this massive rally in gold is literally being driven by central bank buying. Okay, then you got Donald Trump reshaping the global order, and it's causing investors to invest away from the United States, okay, into the rest of the world. They're saying that it's literally playing into China's hands. You've seen Keir Starmer just go meet the Chinese president. You got European leaders going to meet China, and who would have thought that 3 years ago? But Trump's pushing them away, so that's what they're doing. So again, they're diversifying away from US assets, and then lower interest rates is supporting the precious metals because it weakens the dollar when the Federal Reserve cuts interest rates. Okay, so let's understand what this is all about. Sorry, one more thing to touch on, and then you got the fiscal budgets which are exploding around the world. The US debt is getting around 35 trillion. Trump's tax cuts adds even more debt to the US debt pile. Governments are not being fiscally responsible. They're not dealing with the problem. They're just borrowing more and more and more. But to do that, central banks need to keep weakening the currency, cutting interest rates, increasing the balance sheet, which is inflationary, and essentially it devalues the very asset of the dollar that you're buying when you're buying government bonds. So investors don't want to be owning these bonds, and they're piling money into gold. Okay, so that's fundamentally why gold's been surging. Okay, silver's been surging because of the AI infrastructure. Okay, and it's used for AI data centers. It's used for silver is used in solar panels, batteries, semiconductors, and as you know, the whole world is trying to compete with each other to essentially control the AI space. Okay, so that's what's structurally been causing gold and silver to rally. However, what you need to understand is the value of the dollar, as I was explaining, was the reason and the catalyst for the sell-off. Okay, so if we go back over here, it says the Friday sell-off was the biggest shock to the rally, outdoing the slump in October. It was triggered by the dollar rebounding after Trump announced Kevin Warsh to be the new Federal Reserve chairman. Now, he historically has been worried about inflation over the years, and his worries about inflation has forced him to vote against rate cuts in the past when he was part of the board governors at the Federal Reserve. So the markets are looking at it and saying, hold on, so Trump wanted Powell to cut interest rates aggressively. He's pressuring the Federal Reserve to do it. But he's then appointing someone who the markets see as being pretty much like a Powell. He's probably not going to cut. He says he's going to cut interest rates to obviously Trump to maybe get the job, but maybe he's not going to do it because throughout his career, he's never really been someone who's advocating for interest rate cuts because he worries about inflation. So the markets looked at it and said, hold on, he may not cut interest rates the way Trump wants. And that was what caused the dollar to rally. Okay. And this undercut sentiment investors had been piling into the metals because they had been buying up metals, as I showed you, because of lower interest rates. But as soon as his announcement was made, the markets had to rethink, is he going to be able to cut interest rates as deeply as we were anticipating before this announcement? And the dollar jumped on that change in expectation. Okay, traders regard Warsh as the toughest inflation fighter among the finalists, raising expectations of monetary policy that would underpin the dollar, okay, and weaken the greenback priced in bullion. Okay, so look what the article tells you. It's interest rates that drive the value of the dollar, and it's the value of the dollar that drives the value of gold, and it drives the dollar the value of silver because precious metals are priced in dollars. Okay, so the news came out. Here's a dollar index. It jumped, okay? You saw a big move in the dollar, and that was what was the catalyst for this sharp sell-off, where you saw silver plunge 41%, okay? Or you saw gold plunge, I think it's like 20%, okay? Big moves in the precious metals, right? It was the dollar's value. Now, if I show you this, I'm going to show you throughout history, okay? And I'll give you some really good examples of the price of gold, but look at what is driving the price of gold. And I'm going to show you right here, and you're going to see that it's the price of the dollar. Because remember, the value of the dollar is being driven by central bank's interest rates. If the central bank is cutting interest rates, okay, this is inflationary. Okay, they're cutting interest rates to get the economy moving. They're increasing the money supply. This creates inflation. It devalues the purchasing power of dollars in circulation. That's why the DXY, which is the dollar index, weakens soon as central banks start cutting interest rates. The Fed started cutting interest rates, okay, and the dollar's been getting weaker and weaker and weaker. All right. Now, for international buyers, when they're buying gold, which is priced in dollars, guess what? As the dollar goes down, gold becomes cheaper for international buyers. So that's why gold surges. And investors don't want to be buying government bonds that pay less interest when the central bank's creating inflationary pressures by increasing the money supply. So they try to find a hedge against inflation. They buy gold. Okay. If the dollar jumps up in value, as I just showed you, why? Because the market's changing their expectation about interest rates. So the dollar strengthens based on the expectation. Maybe Warsh won't cut interest rates as much, and then gold weakens. So this price of gold is going up or down based on where the dollar's going, and the dollar's going based on one thing: interest rate expectations. So on our macro spreadsheet, we need to understand where is the Federal Reserve's interest rate going, meeting by meeting, and we can see it here. Going into 2027, we're still expecting this year 2 interest rate cuts. That's very good for gold. Okay. Again, think about it. It's going to weaken the dollar, and there's going to be less interest in government bonds. So what are investors going to do as the dollar gets weaker? They're going to buy gold as an inflation hedge, and it becomes cheaper for international buyers. Okay. So what I want to show you quickly is just some moves on gold so you can see the relationship. Okay. Here's a beautiful example. Okay. The Federal Reserve, after the war in Ukraine and COVID, started raising interest rates aggressively in 2022, okay, to fight off inflation. As you guys know, it was crazy all around the world. Look, the value of the dollar index, look how much it skyrockets, okay, when the Fed started raising interest rates in March 2022. The dollar index jumps up 20%, okay? You get a 20% move in the price of the dollar. Look, the price of gold goes down 20%, okay? You can see that move happen right here in front of your eyes. Okay, look, goes down 20%. Look on the right-hand side. That is when the dollar index is going up. Soon as the value of the dollar starts to go down, okay, let's say we have a look at this time here. We see the value of the dollar decline here. Okay, and that was because the markets were expecting interest rate cuts, but it didn't come as they were expecting. Okay, and then look, as the value of the dollar goes down, gold goes up. Okay, can we see that relationship? And then look, as soon as the value of the dollar goes back up again, gold goes down again. Okay, and remember, the value of the dollar is constantly moving based on interest rate expectations. That's it. Literally, if anyone knows anything about currency trading, you just have to know interest rates drive the value of currencies. It's called the overnight carry trade. It's what causes currency flows to pile into different countries all over the world. It's all about the difference in interest rate differentials between countries. Okay, and we can see, if you look at the bigger picture, once we got to this level here, we see a sharp decline in the value of the dollar, around 10%. No surprise, we see the value of gold surging. Okay, so the dollar's value is being driven by the interest rate expectations of the market, and the interest rate expectations of the market is being driven by the macro data, which is pointing towards whether inflation is going to be around 2%. That's why we have to track, for an example, our leading economic indicators that predict where the economy is going, predict inflation. Then we have to pay attention to, okay, so where is inflation now? What's happening with the jobs market? What's happening with wage growth, because that's a key component of inflation. Inflation expectations is crucial for consumers because it drives consumer spending, for an example. Okay, what's the market's predictions for inflation? And then we measure, okay, what are the central banks doing? And then we create like a scorecard where we are building a macro viewpoint to say, okay, this is the inflationary pressures coming. Because once you have the big picture of macroeconomic analysis, where you're looking at the economic data, it will start to explain to you why the interest rate cuts are coming. Okay, now the US economy is doing very well. It's in a very strong position. Even the manufacturing PMI just went above 50, which is very good. If the services remains above 50, which it is, you've got two surveys that predict GDP growth with an 85% certainty in growth territory. But that's beautiful at a time when inflation is on its way back down. We're now at 2.5%. So the Fed doesn't need to keep rates higher anymore. That's what's causing these rate cuts. That's why whenever you get dislocations in markets where something happens that causes prices to decline, suddenly look at the rebound straight away. It's already happened. I've been buying gold. I've been educating all my members on gold, and we're making money on this trade. Okay, so that's what you have to understand. If you don't have the analysis, you don't know the data, you can't track interest rate expectations, you'll have no idea where the dollar's going, and then you'll be confused why gold is going up or down in value. But with this macro analysis, it makes such a massive difference to your trading. Okay, you can go have a look on my YouTube shorts. There's a testimonial of one of the members who I gave this education to. He turned £300 into £50,000 from just learning this. So it's amazing, and it's a game changer. I'll even send you guys the link for the mentoring and the courses if you're interested. But there we go. That's it. That breaks it down to you fundamentally what's been happening. So I hope that makes sense. Thank you guys for watching. Now you understand gold and silver and what drives these metals. And hopefully that will help you with your trading, guys. All right. Thank you for watching.